looking at applying supply and demand change to the market, here we can see we are bullish on the daily time frame. We've had a breakout structure here, and we have this extreme demand here, which we could see hold and potentially create a new high. So what we can see if we go to the 4 hour is, as we're retracing on the daily, that we are coming down correctively on the 4 hour, and you can see this supply chain here, which is formed off of this demand. We get a reaction to this demand, pulls back and fails, and we get a supply chain forming here. So this supply holds, and so on, until we get to the demand, and then supply fails. So this is liquidity being generated above here, which we can expect to be ran once we tap into the higher time frame mitigation. And then we can go deeper into the 15-minute. So even on the retrace here on the 4 hour, so we've had a break of structure on the 4 hour here, and we tapped into something here, and we're starting to see the 4 hour pullback. So going on the 15-minute, we can see that a demand chain forms at the extremes on the 15-minute here. So we get a break of structure, and all the while demand chain is holding. And obviously here you can see there's a range, demand range. It's not always going to be the one single candle. It can be the range of candles. So this whole sell before the buy is what holds here. And here you can see the sell before the buy. Here you can see the sell before the buy. It's not this last bullish candle. The whole range holds. So we could look for a trade from this whole range anywhere within here to take it up to this supply level. And as soon as we tap into this supply level, price then runs down, taking out all of that liquidity, and running down to the daily demand. So if you look for this in the market, you'll see it over and over again, and it gives us a good indication of where price is going to head next and a good place to trade from. So it's worth incorporating into your analysis.